Arnaud, welcome back.
Yes,
How's
thank
your
you.
pup? How's your pup?
Much better. Now my
All
cat is
right.
sick.
Oh, the kids, huh? There's always something going on with the kids.
Yes.
So
Well,
it's
no, my cat. My cat is sick, not my
uh,
dog. My cat.
oh, it was your cat.
No, it
Okay,
was my
so
dog yesterday, and
oh,
today it's
my-
the cat.
so it's raining cats and dogs. So
Right.
anyway, they're
Yes.
the best to have
Oh
in your
yeah.
life.
What are you
So
gonna do?
do they think that we put in a significant high with the buying climax after the
Mm,
election, your cat or your dog?
it could be. Yes, it sure could be.
You're going to share your screen,
Let's
bro?
see. Yeah, I am. I am. Sorry, I was not
Okay.
clicking on the
So
right
we have a
picture.
process to go through here.
We do. Yes, we do. So I think you want to talk about the S&P 500, right?
Okay.
Yeah. And
Whatever's on whatever your
plenty.
higher conviction counts are. Uh,
Oh,
that's
okay.
all right.
Yeah. Then I would honestly straight go to Bitcoin. But
Okay.
let's start with the S&P 500. And just as we heard a couple of minutes ago, it's always good to reevaluate, what did we say or what did we analyze a couple of weeks ago. I think I was on your show 2 months ago, somewhere around there.
Yeah. Right.
And I was looking for about 6,100. I think that was my forecast, with a little bit, of course, ups and downs in between.
The
And
whole universe was looking for
oh
6,100.
yeah, that's right.
That
Everybody
I
was.
mean, that was a count. Actually, there were so many ways to come up with that number, even simple technical analysis. The
Yeah,
breakout
yeah,
at 4,800 was
right.
1,300. So here's what I think. When I've seen this a lot,
Hmm.
whenever the whole universe is looking for one number, it either doesn't get there or it cuts through it like a hot knife in butter.
It could be.
So we
Yes.
got pretty close.
Yeah.
60-40 was
Yes.
pretty close.
Yes. And I think there's still a little bit more gas in the tank, but we might go through a little bit of a rough period. I think the Trump trade after the elections is done for now. It's priced in by the market, which I think is just pure of a certainty perspective. I think if Kamala would have been elected, we might have had the same reaction. It's just certainty for the markets, right? The market doesn't like uncertainty, and the polls and everything showed that the outcome was very tight. Well, unfortunately, the polls were wrong once again, and it was a landslide. So that gave, of course, the market a good sign to know what to expect, right? It's all about looking forward. And with now a new president-elect in the White House, um, the market can anticipate things and look forward, because all that's the market does, look forward. If Kamala was elected, I think the market would have also been excited, because then they knew what to expect as well. 4 more years of what we just had, probably. So that's pretty much what we have baked in the markets now. And from a bigger picture perspective, this is the weekly chart. I shared that with you and your viewers last time. We're kind of wrapping up this final fifth wave. That's why we were in last time, and we believe we're still in this one.
Well,
We
what made
have.
you change your count from 6,100 to
Oh,
6,240?
because we're in a ending diagonal. Back then,
Okay.
we couldn't, of course, know yet that we would be in an ending diagonal.
Okay, got it.
But the
That's
overlapping
it.
price nature suggests we're still missing a last green wave 5 here. And I'll show
Okay.
you some other indexes as well. The NASDAQ 100, very clearly. We're still kind of missing this green wave 5, and most likely we're in this green wave 4. And 2
Okay.
months ago, we couldn't know it. We were like, well, if we just use standard Fibonacci-based impulse patterns and all that stuff, we're kind of
Right.
targeting 6100, and we haven't reached it yet. So I still think we have a destiny with it. So
Okay.
if we zoom in, this is the daily chart. What I just showed you was the weekly chart. You can start to see this ending diagonal pattern here. It's quite overlapping. It's what we call all ABCs. And if you would go to an ending diagonal pattern, I describe it here on my website, and zoom in, it starts to look like this. Some people call it a wedge, other people call it
Yeah.
a triangle, and it's an exhaustion pattern. And it's if we would go, for example, to the Nasdaq, you can almost see it here as well. We're still trans channel surfing, but also here we're still missing a larger fifth wave. So back to the S&P 500. So the market has two options. Either we're going to tag on another ABC higher. It's going to target about 60, 61, which would be ideal because normally the third wave here in red instead of green, yeah, it's a little bit potato, potato. Sometimes my labels change between counts. It's just all, at the end, it doesn't matter if you label it a large wave or a smaller wave, as long as you know it's the end of a third wave and we're in a fourth wave. I think that's the primary message. So we cannot yet discern
Okay.
if we're going to see one leg higher, which would be really nice because a 0.764 extension of this Trump rally would get us to 6061, which would be equal to the 1 degree higher 0.764 times A as well. So this would be wave A, this
Yeah.
would be wave B. October was wave B. And then we're now in wave C, which is subdividing once again. That's the problem with these diagonals. They're always subdividing till eventually they exhaust themselves. And a very good example is in this chart as well, where we potentially just get maybe a little bit lower today, then a bounce, then back to about the high 5,000s, and then our final rally. Then this third wave fell a little bit short of its ideal target, but hey, it's ideal, it's textbook. The market doesn't have to be textbook, yeah. And so here in orange, you see this large diagonal pattern, which is quite similar to the pattern we saw here in the beginning of this year, which was also a diagonal. And you can really see here this orange box, all the ABCs. And every time you
Yeah.
kind of think, well, we have done an ABC up, the market can always tape on another ABC. That's the problem with diagonals. An impulse pattern is a little more clear. You have, your wave three, you have your wave four, that type of stuff. Here you
Okay.
have this continuous addition of ABCs. It's very overlapping. So the forecastability becomes always a little bit less, unfortunately. But again, fifth waves are often diagonals, just as this February-March pattern was a fifth wave as well. It was the fifth wave of a third wave. And now we could be in the fifth of a fifth wave. Bigger picture-wise, we could start to top out quite badly. And I'll show you some other indicators that could start to point that way. And you can see here all the negative divergence we have
Yeah.
on what this is the relative strength, the
Yeah.
MACD.
That's really bearish.
Yeah, that's bearish, and the money flow as well, and it's especially liquidity that drives markets. And you can see we're moving higher and less liquidity. This is the CMF, the change in money flow indicator, is
Oh,
declining.
okay. All right.
So there's less and less
Interesting.
liquidity being put into the markets for whatever reason, and most likely it's larger institutions because they have, of course, the liquidity that are just kind of not putting in the money that they used to,
Like
and that's
yeah,
bearish.
right.
But it's I always say it's
Like Buffett.
yeah, yeah, he is
That
yanking a
he
lot of
owns
money
more
out,
T-bills than the Fed.
right? Yeah, he does.
Yeah. Yeah.
So that's bearish because liquidity drives markets. That is a very well-known fact. And on the other hand, these are all conditions, right? These are just conditions. The market can always rally real strongly and then take care of that divergence and it's all gone. So I would never use it as a trade trigger, but more as a canary in the coal mine, wine, canary in the wine,
I know what you
canary in the
were
coal
doing
mine.
last night. All right.
Yeah.
I
I
know what
had it.
you were drinking last night. All right. Anyway, go ahead. It's
Busted.
early, buddy.
I know.
It could be anything.
Milk.
All right.
Yeah.
So this is five, a five, a five, a five, a five, a
I
five,
know,
a
right? I
five.
know.
Uh,
That's the idea. It's the idea. It's not confirmed. It won't get confirmed until we drop much lower. And
yeah.
so what I use are warning levels. We're currently in a bull market, in a bullish sequence. All these divergence, aside, because those are just warning levels that are conditions that can always be mitigated by the market. Any divergence, be it bearish or bullish, can always be mitigated by a strong rally or a strong drop. So price is always the final arbiter. So
Right.
for my members, I always place warning levels on the charts, below which warning levels is it less and less likely that we, in this case, get more upside? So ultimately, I still think this August low is key, very key. So that's all the way down to about 5,100. We're currently at about 5,900. So the bulls have a lot of leeway because yes, I think it's an ending diagonal, but maybe it's a leading diagonal, right? It could be one or the other.
You know
Um,
what? I saw a count, and I'm an amateur. I'm dangerous with, I'll leave it. I
uh-huh.
saw a count that says that we possibly topped here and
Hmm.
we could pull back to 4,900
Oh wow.
and then go to 75.
Okay. I guess it's possible. I don't see it.
I mean, is there any, can you come up with any kind of wave count that would, because a lot of people be calling it, well, I guess they need closes under 48. But basically, it would be testing the breakout again.
Yeah, then you move it all the way back to the 21 high. I see there, right?
Yeah,
That's about 4,900.
yeah.
Uh, and about
And then go
the
again?
spring, and go again. Nah, it's going to be a tough one because yeah, I don't see it at the
You don't see
moment.
it. All right.
I have to look at it and get back to you
All
in my
right.
next
All right.
interview. Right now, I don't
Okay.
see it.
I just
Um,
wondered if it might have been an alt of yours.
um,
What's your bearish count here? If it we don't achieve
Oh, the
that
most
level
bearish
and
count would be that we have indeed completed this ending diagonal. That the Trump rally was indeed the 5 of 5, the final one. That would be the
uh,
most bearish one.
okay,
But if I look here just at the Nasdaq 100, normally the Nasdaq 100, and the
lead.
S&P
Yeah.
500 are reasonably tied to the hip. I'm still missing, as you can see, if this is indeed a diagonal, a 3, a 4, and a 5. If you look at this pattern, right? So 1, 2, 3, 4, 5, and then we
Yeah.
apply that to the Nasdaq and the Nasdaq 100, I'm still missing a 4 and a 5. I do not see a large 4 and a 5 unless it's snuck in somewhere. Then I have problems with the wave 3 because then the wave 3 will be almost too short. There's just too many issues with
Yeah.
thinking the market has already put in a big top.
Okay.
I cannot see, if I just zoom out like this, I just don't see 5 waves up. It's just a question: are we now in this wave 4, which could very well be, or are we going to subdivide a little bit higher for this wave 3? Potato, potato, the wave 3 will go higher, and the wave 4 eventually will also move into a wave 5. Normally, the 5 of the ending diagonal targets 161.8. We haven't even gotten close. Normally, the third wave targets 123.6%. We got reasonably close. It would have been 21,500, and I think we got a little bit over 2,100, almost 21,250. So within the margin of error, okay, sure, I can live with that. If the Trump trade was indeed the wave 3 high, it wouldn't surprise me. But bigger
Yeah.
picture
Because
wise, over the next weeks to months, I'm still missing a final fifth wave. But again, if we start breaking below these price levels, I was wrong, and then we have indeed topped, and that's it. But so far, the market is not giving me any indication that is the
okay.
case. We're still above critical levels here. Also on the daily chart, we did break. So the daily chart is, of course, shorter time frame. So the warning levels for the bulls are a little bit different. We haven't even broken below I think that is the late October, early November low here.
Yeah, that was right before the election. Yeah.
Right before the election. So that is at about 5,700, somewhere around there. We
Yeah.
haven't even broken below that one.
Right.
Can we? Sure, we can. Then we're kind of,
All
falling
right.
off a cliff.
Say your preferred count works out.
Yeah.
Um, uh, time wise, do you have anything in mind to complete this? Do you think it'd be completed by Inauguration Day?
No, it's going to be after that. This is going to
Okay.
take weeks to months
April?
to
April?
fill in. Yeah, that could be for sure.
Okay.
Yeah, that I can live with. If I would have to put any money on it, sure. Not the
Okay.
inauguration. That would go too quick. That would. We have how many weeks left in this year for trading? 4 or 5, so 6.
Yeah.
No,
Yeah.
that was 6 weeks. That's a month and a half. Mm-mm. Then this fifth wave has to go really fast. I don't think so. I would deferred a little
negative.
bit later. Yeah,
Yeah.
March, April. So let's say April plus or minus one.
Okay.
Just as you can see here, this wave one took about a month. The wave three here took 3 months. So then wave four should take about a month, right? Something like that. That already gets us into December, and then wave five should take at least probably a month plus. So yeah, somewhere around there.
Okay.
Let's say March. Yeah.
All right. Okay.
And I think from a seasonality perspective, we're going to go into a reasonably bullish period. But I must admit, seasonality hasn't really worked all that well this year. But oh well.
Do the island tops you're seeing bother you at all?
Um, no, not really. We've seen them
Okay.
before. Yeah,
Yeah.
I mean, it's okay. It's definitely
Because
from a short-term perspective. Yes,
yeah.
that's a bearish signal for sure. I mean, it's clearly.
Okay.
I heard you before. This is clearly a island reversal, right? We gapped up and then it didn't hold as support. Now we gapped down and are retesting the breakout that we got after the election. And there's of course
Yeah.
a massive gap here that might easily get filled on this wave four. We have this massive gap. It wouldn't surprise me, like you said before, a lot of people probably got trapped here, and that's max pain for everybody. That's the way the market operates,
Yeah. It
right?
does.
Yeah.
Such a mean guy.
Yeah.
So,
Yeah.
was there anything else you wanted to talk about today?
So one of the other reasons why I'm not yet full on the bear train yet is if we look at the AD line is also some sort of indicator of liquidity. And we did get some negative divergence between the October and the November high.
Yeah.
So that can forecast more pain ahead. If there's no negative divergence, for example, if we look here in July and August, we had no negative divergence. Actually, we had a positive divergence between AD line and the market, you'll see
Yeah.
a resurgence and a new bull. Now we have negative divergence, but the negative divergence is on about a weekly time frame. And normally, if you would zoom out to really big bear markets, we need months to years of negative divergence. The '08 crash was foretold with months of divergence. The 2000 crash was foretold by months of divergence. The whole
Right.
50s and 60s was one long divergence till it eventually mattered. And of course, here all the way on the left, the crash in 1930 was also foretold by a lot of negative divergence, meaning price goes higher, but the AD line is not confirming it. And that we just don't see yet. We don't have it. So if every
Yeah, we
single
only
bear
have a
market,
week. We only have a week when we need
yeah, a week
months.
to a month. That's about it. So that seems to be too little. So I'm going to keep an eye on this one. We had a long lasting divergence in 2022, by the way, but that one got erased eventually if we would zoom out. So as you can see here, the market had taken its sweet time to eventually break higher. The AD
Right.
line
Right.
here in 21 all the way to 22. It took a long time. It was one of the longest time frames since the 2009 crash to recoup all the losses in the AD line. And now we finally have a 1 month to 3 weeks of divergence. That's it. But bigger picture wise, that is most likely not enough. I don't know where the chart went.
Okay.
So that I definitely want to pay attention to. And I think once we start to see that, if we're going to see it, of course, there's no guarantee we will, then I think we should get more cautious
Okay.
going
All right.
forward. But I'm
Great
just not
point.
seeing it yet. So I would say hold your horses, bears, hold your horses. We're not there yet, but we have a first shot across the bow. Let's put it
Okay.
like that.
All right.
Um,
Uh,
otherwise, also, this is an interesting indicator. It's the summation index of the McClellan
oh yeah.
oscillator.
Right.
And it's getting pretty oversold. And every time it gets reasonably oversold, we're going to get good rallies. Not instantly. Sometimes you want to see positive divergence developing, like here in October, November last year. But I call it always the ebb and flow indicator. So we're currently ebbing, and eventually the ebb will be replaced by a flood. And as you can see, it's been ebbing for quite a while in the market. And it also shows you that the recent rally we had after elections was based on negative market breadth, meaning there weren't that many stocks advancing. And I've seen a lot of people on Twitter pointing it out, like, wow, the market went up, but very few stocks actually participated in that rally. Interesting
Yeah.
enough. And it shows here in the data, but potential positive divergence developing. It's just, again, it's potential. It's nothing really to queue off on, but we're getting pretty oversold. Also, the SI, the summation index itself, is soon going to bottom levels if we keep on dropping. I think the futures are a little bit down tonight again.
Yeah.
But so this one is a little bit counter, right? So, but this is more of a shorter
Yeah.
term indicator that
Okay.
suggests in line with, well, we might be wrapping up this wave four, this wave four, and then the wave five, because eventually, of course, we cannot keep on dropping in this indicator. At some point, there's much more room left to the upside than to the downside, right? What is the path of least resistance? At some point, the path of least resistance is back up.
All right, Arno.
All right,
Great
that's a long.
presentation. No,
Yeah.
I mean, really, especially thanks for sharing the internals that you pay attention to.
Yeah, I pay attention to it. Price always first. Price is the final arbiter. Things can always get much more oversold than we think. Price is the final arbiter. That's the trade trigger. These are all conditions. But if you align them, for example, with a wave count where you say, well, we expect probably a fourth wave that will resolve into a fifth wave, then this indicator tells you, well, yeah, at some point there is plenty of
There's
room
another
left to the
rally
upside
coming.
for this
Yeah.
indicator. There's a
Okay.
lot other rally coming. Yes, that's kind
Yeah.
of what it
It's
starts to suggest.
interesting you
But
brought up
don't tell us when.
yeah, well, it's interesting you brought up December, early December, because there I have a lot of key dates around the 7th, 8th, right in there
Ah, okay.
for a
Interesting.
potential low.
Interesting.
Uh,
Wonderful.
why don't you show people that want to learn your style of
Sure.
Elliot and what you do, where they could find you, and
Sure.
what kind of services you offer?
Yeah. So they can find me on intelligentinvesting.market. And we provide many types of memberships. Anything from what I just covered, what we call the major markets. We do also ETF trade alerts. People get a daily email with short-term to long-term trade alerts for all the ETFs that trade the markets, from the SPY to the QQQs and the TQQQs, whatever you want. We follow, of course, the Magnificent Seven. If you want to trade Apple or Microsoft or Nvidia, these are mechanical trading systems based on price, momentum, strength, trends, and all that stuff, with a lot of variables going in. And sometimes they win and sometimes they lose. But in general, like Netflix, we've had a wonderful Netflix trade that's
Yeah.
been long for quite a while. I think the
What are you
short
doing
term.
with Apple right now? What's your position on
Um,
Apple?
oh boy, I'll have to look. I think short term we're
That's okay.
long,
Oh, okay.
and intermediate term, I don't.
How about Google with the market making new all-time highs, Arno? Google only retraced a certain amount, put in a pretty negative reversal week last week.
Yeah,
Is
so
that
short
on a
term.
different count?
Yeah, short
Yeah.
term, we're Google. It's a very tiny short position.
Okay.
Um, Also, that with trading and the ETF trading, we tell people what type of size of position, because if you're a strong uptrend and we get a correction, you don't want to full on short it. So short term,
Okay.
it's short. Intermediate term, which is like weeks to months, it's still
It's
long.
long. Okay.
But it has already sold some of the original position that was bought a while ago. And long term, it's long term. It's long since April last year. So that's how long it's. It's only 25% of the original position left, because it sells into strength. So my
I
systems are
see.
designed to sell into strength. So by the time the trend reverses, be it short term to long term, and hopefully you don't get stopped out. But by the time the trend reverses, you only have 25% left, so you don't have to worry. You can just sleep
All
well at
right.
night. That's just house money.
All right. How
Other
about
things.
Nvidia? Nvidia going into earnings. What are you doing?
Oh yeah, so Nvidia, my system actually went long on the short
Okay.
term. No, it actually went short on the short term, but I warned that it doesn't take the earnings into consideration. So that's probably on the short term something you want to
Just
probably
watch.
not touch. I would wait on it.
Yeah.
Yeah, it's
Yeah.
always
Watch it.
watch. Intermediate to long term, it's long.
Yeah.
It's been
Okay.
long. for a while. So,
Yeah,
and then of course we do Bitcoins. We have of course the
are we in wave
Bitcoins.
5 in Bitcoin here?
Yeah, we're just wrapping up
We're
a
wrapping up
third of a
5?
third of a third wave.
Oh, okay.
A larger fifth wave, yes. So short term, we're looking at six digits. We
Yeah,
believe
120.
Bitcoin is not, yeah, something like that. Then a big pullback and then another rally.
Okay.
We think Bitcoin is not done yet for a while. But again, as we say,
Probably till the market is.
yeah, contingent. As if Bitcoin is bullish most of the time, it means there's quite a lot of risk on mentality out there.
Right. Yeah, that's what I'm saying. Yeah.
Yeah, and
So
as long
maybe they
as
both could go to April.
yeah, it could be. Yeah, it could very well be. Though Bitcoin, we're a little bit further out. We expect top somewhere late next year, based on previous tops when they occur. But again, it's all contingent on price holding above these warning levels. And as you can see, the
Yeah.
warning levels are quite low
Yeah.
before this super subdividing third of a third wave is over. But yeah, we've been bullish Bitcoin. I just checked since September 2022. So that was the first time we decisively turned bullish on Bitcoin. So most people are just finally jumping on the bandwagon, and yeah, that's the difference. We've been bullish for 2 years,
Yeah.
right? That's
Yeah.
the difference between us doing this as as our profession versus those that just casually jump in,
Yeah.
pros versus amateurs. Nothing wrong with now becoming bullish. I think there's still plenty of upside left, but that's the difference. Though I must say, March through August was quite frustrating for us that follow. Price action so closely. I mean, Bitcoin went
Yeah.
nowhere from March to August. That was very frustrating. Every
It was
time I thought Bitcoin.
building that handle for a cup and
Right. Yeah,
handle.
that was what we
Yeah.
were building. And I call it a base. I said the longer the base, the bigger the breakout. And it
Yeah.
has certainly not surprised. So that's good. We remain bullish on Bitcoin for sure. We've been bullish for 2 years. I think last 2 years ago, we said 100,000 plus to 200,000. And look where we are now.
Yeah.
I remember I had people actually just canceling their servers October, just like 2 months before Bitcoin bottomed, because it was all POS and it would all go to hell and nothing would work and it's full of scammers. And yeah, they just leave right at the bottom. And let's turn that around.
It's a
And
great contrarian indicator.
it totally
Your
was.
client
Yeah.
base.
Yeah.
When they get discouraged, you're right about to enter the
Oh, no,
zone.
true. It's true. It's
Yeah.
absolutely true. And it's sad. And I try to
That's
turn that
why.
around, but it's
Well, then
impossible.
why don't you do this? People want to learn the secret of trading.
Yes.
And you know what the secret of trading is? There is no secret. It's
Correct.
hard work and living through adversity. And if you can't do that, find something else to do, if that scares you. So,
Yes.
maybe if
Yes.
you set people up and prep them for uh, lower their expectations and say, is this risk capital? And when I was a broker, I would say, you know that check you're funding this account with? I want you to imagine striking a match and lighting it.
Uh-huh.
And if that makes you nervous, it's not risk capital.
Right.
All right.
Yeah,
That's a
that's a good one.
that's a mentality that people, they might be trading with their mortgage money.
Oh, please don't.
Okay, I know. Well, maybe I know
This
someone's
trade.
looking for a housing crash this year. So anyway,
Yeah.
we'll see. Maybe that's okay.
Yeah.
All right, buddy. Well, great
Wonderful.
yeah, great talking to you. Follow Arnour at Intel_invest on X and
Yeah.
check him out. This guy knows his stuff,
Thank
and
you.
as you can see, he can hold things. So there's one thing it's great if you have a great call. It's better if you convert that call into a trade, but the best thing of all is if you could convert it into a hold.
Yes. Yes.
Okay. So,
Big time frames, big gains.
yeah, there you go, buddy. So, my trading warrior brother, Arnaud Tashur, check him out. I wouldn't have been talking to him for years
Yeah.
if I didn't think he brought value to the table. Okay.
Thank you. Appreciate
That's
it.
my endorsement.
We'll
All
take
right,
it.
buddy. All right, Arnaud.
Wonderful.
All right, take care, buddy.
You too.
I'll see
Yeah.
see you
Talk.
next year in the brave new world.
Oh yeah, sounds good. Yeah, let's see what that one brings. It's going to be interesting.
It will be, buddy. All right.
It will. Bye.
Thank you. That's a wrap, everyone. You enjoy that? Yeah. Ingmar liked it. Adam liked it. People liked it. What about NVIDIA earnings? I don't know. Who do you think I am? AJ Pinkert? Huh? I'm not. Anyway, don't just count your pips, count your blessings. And see you tomorrow. Have a good day trading. Adios, everyone. See ya.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.